Hello there and welcome to this discussion on the new age of venture capital, where we're going to focus on how the VC landscape is changing and what that means for you. My name is Liz Scott. I'm Head of Entrepreneur Engagement at TechNation, and I absolutely delight in the work that we do to support digital tech scale-ups right the way across the UK. I've got with me an absolutely amazing panel who all will be bringing different perspectives to this discussion. So why don't we dive in and do some quick fire introductions before we get into the detail. Now, I'm going to apologise in advance to my wonderful panelists because I am going to keep you moving at quite a pace today. We haven't got long and I really want the audience to hear your fantastic insights. So I'm going to limit you to probably like 2 minutes max for your intros. Okay, so let's go. Let's start with you, Andrew.
Okay, I'm Andrew Williamson. I'm the managing partner of a venture capital firm based in Cambridge called Cambridge Innovation Capital. We are a Series A venture capital firm that was set up about 8 years ago to invest in all that a thriving ecosystem like Cambridge is good at creating. And as you can imagine, being a university-centric town, most of what we invest in is what we call knowledge intensive or IP rich businesses. So that can be anything from tech and deep tech all the way through to biotech and life sciences. I'm a PhD physicist by training, and so I cut my teeth doing high performance simulations and quantum simulations in my PhD here in Cambridge. Then spent actually 20 years working in the States, mostly in Silicon Valley. First of all in R&D, I ran a research group in Berkeley, and then moving over into venture. And then I came back to the UK 5 years ago to join Cambridge Innovation Capital because I was just blown away by how things are growing here and how exciting Europe is as an innovation ecosystem, and particularly my sort of adopted hometown of Cambridge. The change here in the last 20 years since I was a student is quite dramatic. So lots of exciting stuff going on that we can talk about later.
Incredible. Thank you, Andrew. Lena, would you mind going next, please?
Of course not. Yeah, so my name is Lena Venner. I'm associate partner with First Minute Capital. We're a pre-seed and seed fund based out of London. Have been around since 2017, operating from our second fund, which we recently closed, which is $160 million. The first one was 100, so a bit of a trend there as well, which I'm sure we'll talk about later. And sector agnostic fund, so we really want to fund the best talent across sectors and be able to follow them into exciting industries. Invest across Europe and the US, so pretty broad from a geographical perspective as well. And the biggest thing to kind of remember about us is we're backed by largely tech entrepreneurs, so backed by more than 100 unicorn founders, which is a really exciting group that we try to leverage as much as possible for the portfolio as well. I'm German-Swedish by origin and based out of Berlin, so I cover the DACH and the Nordic regions for the fund. Also spend a lot of my time looking at health tech companies, but also on the board of a couple of B2B SaaS companies, and consider myself a generalist, really.
Fantastic. Thank you, Lena. And last, but definitely not least, Alan. I don't know that we can fit you into 2 minutes, can we?
No, but I've got to follow Lena. That's never an easy challenge. So let me try. Alan Greenberg, ex-Apple. So I was Apple's education director, built products like such as podcasting, iTunes U, first generation of the App Store, first generation of education apps. Left Apple initially across Europe, then China. Left Apple actually end of 2009, 2010, returned to the UK, basically unemployable. So too old, too expensive, and an ego bigger than the buildings we're sitting in. Which is not a good career move, I would point out to anybody listening. Today, I'm a senior external advisor to McKinsey, and I'm not sure whether senior is because of my age, because of my domain expertise. I'm a trust architect at Immutable Insight, which is a blockchain fund out of Munich. I'm a venture partner at EDT and Partners with education consultancy, and I sit on the boards and advise and help scale a number of both education, health tech, and increasingly some blockchain services business. And that is the briefest synopsis I think I've ever done. So,
well, it was incredible. Thank you. It was slightly head spinning. There was so much in there, but it was perfect. Thank you. And as I mentioned before we got into the introductions, a really broad range of experience and expertise, I think, in this panel is going to make for a great discussion. Okay, so let's get started. And I'm going to set the scene a little bit just for 30 seconds or so. I am really interested in what's actually changing. We've got a fairly well-established VC market now in the UK. I had a quick look look at some of our sources this morning just to get some stats. We love them at Tech Nation. And even just in the first half of this year, tech companies in the UK have raised in the region of a record-breaking $18 billion of VC investment. Now, just to give you some context on that, in 2020, which was a record-breaking year in itself, the whole of the year, we only saw around 15 billion of investment. So we are tracking so far ahead of where we've ever been before. So I would love to get into, from your perspectives, what's driving this? What changes have we seen? And maybe we could start that discussion by talking about who is investing. Where is all of this money coming from? Should say, happy for you to jump in, or I can pick you like a school teacher. I'm comfortable either way.
Well, I don't want to upset Andrew and Lena, but I'm happy to kick it off if we want a robust debate.
You go for it.
Brilliant. Thank you.
I think there's a paradigm shift. I think that, you quote figures, but you don't actually paint a picture of the background. The background for me is that I think that if we look at the world in March 2020 and look at the world today, it's a slightly different environment. And I think from a venture capital perspective, I would argue, and Lena will probably shout at me at this point in time, that early stage investment, certainly for early stage up to Series A, is increasingly challenging. So I think that's a problem. I think there's some good news and bad news in terms of the fact that I think money is becoming smarter and it's looking for impact. So I think that even an early stage business has to come to investors with something of value and something that can drive sustainability and engagement in whatever market it is. But I do think that traditional venture capital, as Silicon Valley perhaps initiated, I think is broken. I think what I'm seeing is a lot of consolidation around, let's say, M&A activity, consolidation around public companies able to buy portfolios of businesses to build a consortia. I'm seeing enterprise organizations investing in organizations. And in fact, I'd be interested to know the principles around Founders Forum, which is an organization I admire greatly and I'm pleased to be a friend of. But I think there's a lot of interest now as what Brent and the team have built is now more relevant today than it ever has been. So I think we're looking at a different model. I think early stage is difficult, scale up is easier, more serious money, hedge funds, organizations, enterprise coming into play. I think we're looking at a completely different ecosystem than we were 18 months ago.
Oh, that is a fruity place for us to start, Alan. That's a fantastic start to the discussion.
So there you go.
Exactly, and that's why we're here. These insights are why we're here. Let's unpack some of that, I guess, and maybe Lena will come to you next on this. This idea of early stage being more difficult. Do we see that in the market? Is that playing out in the spaces that you operate in, Lena, and also you, Andrew?
I think for me, I'd probably disagree on the point that you made, Alan, in terms of early stage, because maybe two things to pick on. One, if we look at loss ratios across seed stage portfolios, they're like scarily low at the moment, and I don't think that's because investors get better at picking companies that survive. I think it's generally because a lot more companies get funded than maybe it was the case 5 years ago. So I think that's one thing that kind of is a good proxy to look at in terms of how easy, quote unquote, it is to raise early stage capital at the moment. I think the other two more things probably happening. One is there's like a proliferation of capital sources. So I think it's, from going mainly from venture funding to family offices who are thinking more seriously about venture, probably more business angels out there as well. You've got more public funding as well that companies, especially if they're more on the deep tech side, can tap into. And then I think when you see, later stage investors moving further downstream because we've got capital coming in from the US, we're competing, with Series A funds at the seed stage very often. So I think there's just more capital even at seed. And then, those are probably, I would say, the biggest two indicators. And then also just looking at median valuation increases, I think just shows that there's a lot of demand for, at the seed stage as well. And I think median has moved up even the last couple of years quite a lot as well, even at the seed stage. And we definitely see the difference from our first fund to our second fund in terms of what the average valuation looks like when we come in.
But if I'd like to comment on that before going to Andrew, if I may. I think, Lena, you sit in a very interesting space. I think that what you've done with the current fund is truly innovative and remarkable. I think by bringing in experienced founders, people who are going through their first, second organization, I think you bring a real amount of wealth and value, advisory pieces, and the ability to scale and leverage businesses. And I think that is increasingly going to become the model. I don't think just pure speculative businesses are going to work that well. I mean, I would argue that, and Andrew will probably pick me up on this point, I'm not sure venture capital per se is that clever. I think they have money and they know how to allocate it, but I'm not convinced they're that clever. I think what you've done is you put together a clever fund that understands the characteristics of business, particularly digital businesses, and could leverage that. But I will allow Andrew to shout me down at this point.
I should bring you onto every panel, Alan, to say nice things.
No, but the point is, that's how I see it. I mean,
Yeah.
Andrew, tell me I'm wrong.
No, well, goodness, there's lots and lots of things to respond to there. So let me just scribble down a few notes. Yeah, really interesting discussion. I want to come back to Lena's point first of all. What I would say is follow the money, because I think so often these discussions are very entrepreneur centric and everyone follows the entrepreneurs, but actually the ability of people like Lena and myself to deploy capital relies on limited partners giving us money to, or investing in our funds to deploy those. So where's the money coming from? And I think Alan made a couple of interesting points. When I sat on panels like this a year ago, the refrain that we're hearing from everywhere was flight to quality, right? I mean, that was the standard reaction to what's going on in the world. We don't know quite what's going on. Let's just pull in our horns and be safe. And so that definitely drove LPs to later stage funds and to established brands. Everyone would rather make, I'm not going to pick a name, but XYZ Fund 10, turn that from 1 billion to 1.5 billion than to invest in a first-time manager. That was certainly what was going on last year. And we were certainly joking inside my firm because, you know, we see everything from sort of seed stage, which is our deal flow, and we have a couple of accelerators in that space, all the way through to IPOs. And the sort of refrain within my firm last year was that it was easier to raise 100 million than it was to raise 10 million, because there was a lot of capital available for those later stage growth rounds. And we're certainly continuing to see that, although I would say with now when you see where the markets are, that dynamic has mostly relaxed. And actually there's quite a lot of capital, and we can talk about the different sources. What I would say is chasing alpha, for looking for something a bit different. And so, you know, sitting where we do, investing in things like deep tech and biotech, which certainly have risk. In some cases, they have binary risk. They have a lot of technology risk in a way that a pure sort of business model play, like I don't know, an e-commerce site or something like that, SaaS software, doesn't have. But we are seeing much more interest in those type of companies and investing in funds that are going into those type of companies than we were a year or two ago. And I think that's a great thing, by the way. I'm a big proponent of sort of disruptive technologies. With regard to, you know, the numbers that you mentioned, Liz, at the beginning, you know, the sort of this year's bigger than last year, it's bigger than the year before. I think, you know, if you smooth out things like COVID and stuff, the context I would just put that in from a European perspective is that unlike US venture capital, European venture capital is growing from pretty much a standing start at the turn of the century, right? I mean, back in sort of 2000, there was almost nothing going on, right? When I graduated in the mid 90s, I went straight to the States for good reasons, right? Because that's where the action was. And so we've seen very steady growth over the last 20 years to the point where it's really getting quite interesting now. And, you know, 18 billion is a good number, and there's room to grow that. But I think that's probably just more a reflection of as the ecosystem matures, by definition, you have more later stage companies that are raising later stage larger rounds, right? So even our own firm, which is only 8 years old, we've done $1 billion this year, but that's because two companies raised $500 million each back from, you know, but that was 7 years in the making, as it were. And I think that's probably something that we're going to see repeated across the industry. So I'm not particularly surprised by that. And I'd be disappointed if we didn't continue to see that growth for many years to come. Maybe I'll leave it there for now.
I know we could go around organically for so long, but I'm really worried that we've only got 40 minutes. So I am going to corral you a little bit. But I think we've hit on some really interesting points there. And I think one of the immediate things that does come to mind as we talk about some of these huge funds that have been raised, the proliferation of non-UK funds really seriously participating in the UK in some of those later stage rounds. And I think we've seen that even just in the last few months, the like of Cinch, Revolut, Hopin, Bought by Many, Sneak, you know, the list goes on of these real kind of mega rounds that we've seen and often backed by non-UK VC. Can UK VC catch up? You know, we talked there, Andrew, about the kind of maturation of the VC model here in the UK and the fact that, you know, it does take time for some of those later stage companies to grow. What about UK VC? Can they catch up? Can they participate in those rounds in a meaningful way? Are we expecting to see that?
Okay, thank you. I think that was somewhat of a planted question, but so I wear another hat, which is I'm just became actually the chair of the Venture Capital Committee for the British Venture Capital Association. We actually had our quarterly meeting this morning, so this is very timely. And one of the key topics on the agenda, and is likely to be on the agenda for all 3 years of my tenure, is how do we get more UK capital into these dynamic growth sectors, whether it's as limited partners in funds or then as those funds investing indirectly into portfolio companies. So, you know, for the longest time, if you look at, although we've had a great growth in European venture, including European GPs, if you look one step further inside, most of the LPs in those funds have been international, right? I mean, even sitting here in Cambridge, investing in great Cambridge spinouts, and we have a lot of support from the university and things. The majority of the capital we're investing in, I'm disappointed to say, is not UK LP capital. It's sovereign wealth funds, it's corporations, it's family offices from the US, from Asia, from the Middle East, right? So the capital has always been coming from outside the UK in the form of LPs. What's changed in the last few years, which I think is a positive trend, is we are now seeing more UK GPs being established. So in particular, a lot of the West Coast firms are opening up London offices, typically UK offices. So you now do have local GPs investing in those businesses. I suspect that the LPs behind, you know, the new Sequoia, or Accel or whatever funds based in London are still probably not UK LPs. So there's some almost sort of regulatory or sort of cultural things that need to change in the UK so that, for example, pension funds can participate in our world in a way that they do significantly in the US, increasingly in Canada, Australia, and places, but do not do here. So I think you have to look right up and down the food chain or the sort of the capital chain here, and there's a lot of opportunity for growth, is the way I would phrase it.
Can I add something here, because I think there's two sides to this coin. I think the other side of the coin is, I think that from a UK perspective, I think we need to be smarter in building technologies for the world rather than building the technologies for the United Kingdom. And I think the more we start to grow businesses which have global impact, because one of the things that is still accepted, I mean, the UK is still a remarkable place to build technology companies. We have, you know, for whatever reason, some of the best teams, some of the best universities. There's many, many reasons why the UK is a very healthy place to build tech. But I think increasingly we need to look at building tech for the world, not building tech for the United Kingdom. I think Hopin is a perfect example of that, because it is a global company from day one and is accelerated because it built that. And I think that's a lesson to be learned and a lesson to be considered. So that's looking at it bottom up as well as top down, I think is critical here.
Yeah, and I'm interested in that theme actually. I was going to come to that later on, but let's talk about it now. In terms of driving the type of genuine innovation that you're talking about there, solving global problems, solving real kind of crises of our time, how would we like to see VC participate in encouraging that? Because I think you're right. I'm not sure the model does at the moment, but what would we like to see? How would we go about that?
But isn't it all about problem solving? If I give you an example, if you take the education space, we have distributed networks with children not returning to school. We have universities who are increasingly teaching online, not as an option because it's critical. And in enterprise, you have people not returning to the office. So all of a sudden, you've got distributed networks that need to be serviced. Then you've got a lot of companies who are pivoting, trying to take existing technology to meet those demands when, quite frankly, they weren't built to do that. And you've got an opportunity for innovation to happen to actually extend those opportunities. And I would argue in this distributed network, whether COVID passes or vaccines succeed or whatever circumstance you want, we're not going to return to where we were in March 2020. It's a different world. So the opportunity for innovation is there. The opportunity to grab market share, to develop technologies is there. And what we need the support of the investment community to take that on board. I'm not convinced, although my two colleagues maybe will try and persuade me, that it's yet a joined up process. I think you've got people with money who want to allocate it, and there's a lot of safe bets, and you've got people who are innovative who need the support of that money in order to achieve their objectives.
Yeah, I think one thing that I find to be exciting at the moment is that we're seeing a few more sources of like more patient capital that can go towards projects that have a perhaps much longer time to market and have a little bit more science risk attached to them. And so I think there's more people out there really looking to invest into moonshot ideas, similar to what Andrew said earlier. And then there's also, I think, a bit of you're also seeing a trend where entrepreneurs can access liquidity a little bit earlier, which also I think can help that. And we could talk about SPACs as well, but maybe not for today. But I think there's some encouraging trends there for sure.
Yeah.
Maybe we can just pitch in a little bit. I mean, I think I would agree with a lot of what you said, Alan. Another one of the sort of mantras that's been going around in Cambridge for the last 10, 20 years is that we are the spare parts engineer for the world's tech companies. And you could probably tell what I mean.
That's probably not a bad thing, Andrew, I would point out.
Well, I mean, actually, if you look in the Hall of Fame of the computer science department in Cambridge, for example, which has created some world-class technologies, you probably acquired many of them from Apple, and they continue to do so. But most of those companies were acquired at that point where they'd proven out the technology, they got their first few customers, but they hadn't scaled to a global business. So we saw a lot of exits, again, to sort of come back to money, sort of exits the $50, $100, $200 million range, which was life-changing for the founders of those businesses. Doesn't particularly move the needle for $1 billion venture capital fund, and more importantly, doesn't create sustainable technology companies in this country, creating lots of jobs, training the next generation of entrepreneurs. It's just a handful of people who go off and very nice like in Palo Alto.
But you confirm my earlier point. I think there's a lot of enterprise looking at doing those. I mean, Workday, for example, and others who are looking to make those acquisitions. And again, if you look at it from a pragmatic business point of view, I don't think that's a bad thing. I mean, I'm not saying it's good for venture capital, but do I care about venture capitalists? Maybe not so much. The point being, I think from an enterprise point of view, I think it gets interesting where enterprise comes into play and we have the opportunities. I mean, look at Blackstone, look at a number of organizations, look at some of the hedge funds now getting active. I mean, it's a very interesting space today, and I think the opportunities are there. But I think that there's a consolidation that needs to happen, and there's a communication piece need to happen. And maybe that's one of the reasons that, London Tech Week needs to have these conversations so people understand the opportunities.
Yeah, I mean, what we're focused on is, I mean, and I think you mentioned this earlier, and I would completely agree that the quality of the innovation, the IP, the human talent that's creating that innovation in the world-leading research institutions around the UK is Cambridge is every bit as good as Stanford from that perspective. I can say that firsthand, having worked at both. What the UK has always lagged on is the commercialization and the scale-up piece, particularly of these more disruptive technologies. I think on the sort of the lighter tech side of things, I think we've seen huge strides. And the question is, how do we extend that into these more disruptive technologies? And I would argue that wearing a UK PLC hat, that's an important thing, right? We want to be building larger, more sustainable businesses here in the UK. And so, there's multiple ways of funding that. If you're going to fund that with venture capital, which obviously has certain return expectations, then you need to be looking at how can you capital efficiently and scalably grow these businesses. And obviously some technology, software has always been relatively easy to do that in, biotech as well, actually. So somebody mentioned vaccines, for example. I mean, I think Vaccitech coming out of Oxford, generating the AZ vaccine is a wonderful example of the UK doing something for the world in a very capital efficient and scalable way, actually. I'd like to see us doing more in the sustainability arena. I'm actually a clean tech guy by training, and so figuring out how to build a large battery business or a wind turbine business or something, that's more challenging to do with 35% IRR equity dollars. It's not impossible, but that's something that we're focused on, and I don't claim to have all the solutions, but organizations, meetings like this, discussions like this can hopefully spring up the kind of partnerships we need to do that.
Yeah.
Great.
Now, sort of pivoting slightly away from that, but only slightly, I was interested in something that Alan and Lena both referenced earlier on, in terms of the type of support and the level of impact that we see VCs having on their portfolio. I think, to your point, Andrew, about building sustainable businesses and having people and expertise that have been on that journey and taken these companies to huge scale, if we haven't got enough of it, how, Lena, perhaps you could talk to us about how you use the experienced founders in your network and that have invested in the fund, how you use them for the benefit of the portfolio, because I just think that's such a great example that we should be seeing more of.
Yeah, and it's quite an unusual setup in that, because we invest so broadly as well, we don't claim to be experts in every single sector we invest in, but we are pretty confident to reach, very, very relevant people in those sectors who are not just probably the best people to help you succeed in that sector, but also typically the people who have invested in First Minute, they did it, hopefully as well for financial returns, but primarily because they're excited about backing the next generation of entrepreneurs. So we're getting very good engagement from our LP network on exciting businesses because they just want to engage with them and they want to see them succeed. So I think we've got a very big platform team to kind of support that, because when you have a very fragmented LP base, you kind of need to have that manpower to get the most out of it. But yeah, so far that's really how we've gone about it, and tried to use technology to kind of make sure that matching works out in the most efficient way, and get the entrepreneurs in front of the people who can really increase the probability of success for them the most.
Amazing.
Liz, maybe I could just throw in one slight plug related to that topic that hopefully is interesting along that line of thinking. So we were discussing internally the whole concept, sort of, it takes a village, in this case, not to raise a child, but to build a business. And we think we've got a pretty interesting village here in Cambridge, certainly when it comes to something like deep tech, whether it's the university, whether it's ARM, whether it's, the now thousands of startup companies that are here. But we are obviously constrained as a VC firm into investing in just a handful of new companies every year. And so we thought about how can we expose the expertise, the capabilities of an ecosystem like Cambridge to the broader UK ecosystem. So what we've done is we've set up an accelerator called Deep Tech Labs, where, particularly in the sort of the ML AI data science space, but applied in a range of verticals, companies can come and spend 3 to 6 months in Y Combinator style programs here in Cambridge, get mentored by the experts who've been here before, the entrepreneurs who've done it before, talk with investors like us who, as those businesses mature, would be interested in investing in them. And I'm delighted to say we've now done 2 cohorts of this program. It's been a huge success in terms of the hundreds of applications we've had and the quality of businesses that have come through it. So I think that was a lesson to us, that there was sort of a latent demand for the kind of support and expertise and advice that First Minute can give. But I think in other sectors as well. We also set one up in the life sciences called Start Codon a couple of years ago that's had a similar success. So I think there's always that need for as much advice and support as mentorship, particularly at the early stage, as one can give. And it's a matter of finding models to achieve that.
But if I can respond to that, I mean, the first thing to say is, Andrew, why didn't you call me earlier? The second point to make is that I do think that the whole model about accelerators and incubators needs revision. I think there is a new generation of incubator. I mean, certainly when I think of my colleagues and friends at Founders Factory, I think that that's one of the greatest hubs in the country, if not one of the greatest hubs internationally. And certainly I'm very pleased to hear that you've got this innovation going on in Cambridge. But I mean, how you build the community around that, how you build the mentoring advisors around that, how you build experience. I mean, there are a number of models, and certainly I think that's worthy of a whole discussion in its own right. The other thing I'd like to explore, if I may just take a slight tack, is that I think one needs to look at different funding models. And if I can give an example of something that I'm working on, which is it actually is in fruition, it's actually live now, but it's not necessarily promoted yet. But we're looking at, with a team that I'm working with, we're looking at licensing models on blockchain. And if you think about the cost of biotech, I mean, you think about, if you take a simplistic argument, you think about a cure for cancer. A cure for cancer is going to cost billions of dollars to achieve its objective. So it doesn't have to be purely investment from funds. It could be done under a licensing agreement against that particular product or commodity, where people have the opportunity. It's almost like crowdfunding, but on a slightly different scale, on a slightly more consolidated basis, where you can actually appeal to people who want to make a relatively small investment that they couldn't make through traditional venture capital, but actually buy into a cure for cancer, or as Andrew talked about, the battery opportunities. I mean, there are different models need to be cultivated to meet the demands of today. And I don't think that venture capital is the only way to move forward. That's the point I'm making.
Yeah, very, very important point. And, you know, when we are talking about different models, the success of programs like the one that Andrew runs in Cambridge, and making sure that the best of a subsector or the best of an area is available to the whole of the UK, you are kind of preaching to the choir when it comes to Tech Nation. We love a bit of cohort-based learning. We absolutely love sourcing these incredible founders from all over the UK.
Well, but someone on this call has actually built that infrastructure and might want to get some credit for it. So am I allowed to plug you at this point in time? No, but the point is, you need to tell the story. The point is, you build hubs around the country for exactly this reason. It's not just a London-centric organisation, although we're talking about London Tech Week.
Absolutely. And, you know, we take the view that in the same way that Andrew's team have identified this incredible centre of excellence in Cambridge, London is a centre of excellence for lots and lots of things. So if you are based in other places in the UK, you should be plugging into that. You shouldn't be pushing against it and fighting against it. You should be plugging into it. But also we are the pipes, if you like, all across the UK. So if Andrew's team or Lena's team or Alan's team, if you have a new initiative that you need founders all across the UK to hear about, we are always happy to signpost and put that message out. But that's kind of for another day. We've not got long left, so we're not going to do this next topic justice. But I did want to ask your opinion, because you've got such incredible expertise in the space. We've talked about what we are seeing, what is present in VC in the UK in 2021. We've talked a bit about what's missing in terms of different models and different approaches and driving genuine kind of world-leading innovation. What are we seeing progress-wise, and what more do we want to see when it comes to underrepresented and overlooked founders? I know that between the three of you, you've got some great projects and initiatives that you've been involved in, and I think it would be great for us to spend a couple of minutes talking about those. But I'd also love to hear, what else would you like to see? What are we still missing? And I'm just going to open that up.
I can make a
start. Come on.
Yeah, so I think maybe from the funder perspective, so if you look at in the VC landscape, just I've seen a huge change going from 2017, when I knew pretty much every female VC investor in London by name, and I'd probably gone for a drink with them as well, to now where we've really, at least at the more junior and mid-level stages, we've seen a bit of an evening out in terms of gender, pure gender background. I think at the GP level, it's still obviously an issue, but hopefully we're seeing that trickle down over the next few years. I think if you look at other dimensions of diversity at the VC level, it's still not a great picture. So I think socioeconomic background is a big one, where we all know each other. Sort of a lot of people know each other from school. I think that's actually scary how tightly knit that community is from even pre-VC. And I think that should change, and we should think more about how that can change. And yeah, ethnic diversity, I think it's the same. So not very much happening there from my perspective, if you compare with the gender dimension. And then I think in terms of at the early stage on the entrepreneur side, I think we're seeing some very interesting initiatives just kind of like widening the funnel at the very early stage, and especially bridging that gap of like family and friends money, where if you're from a more privileged background, you may have access to that initial funding, whereas if you're from a more underrepresented background, then it might be more difficult. So I think there's great initiatives there. I'm involved with the Emerge program with SoftBank, for example. There's a great one coming out of Brixton called Black Seed as well, which is just starting now. And there's tons, and I think that's a great shift that we're seeing. And hopefully, if we do that at the early stage, we'll see more underrepresented founders also moving through at the later funding stages.
Yeah.
Just under that heading, Lena, there's an organisation out of Croydon called Nexus, which again fits that model. And again, I would recommend you have a look at that in due course. But I could not agree more. I mean, from my perspective, maybe I take a slightly different context to this. I mean, for me, it's all about investing in people, not investing in technology. The technology bit we can fix, people slightly more difficult. And again, I made myself a promise 10, 12 years ago when I left Apple, is that if someone reached out to me and wanted a conversation, I would find 45 minutes of my time to have that conversation. I would say I give them a health warning. I say to them, well, if you're going to ask me a question, I'm going to tell you what I think. And of course, the immediate answer to that is, yes, we want to know what you think. And I say, well, actually think again, because I'm going to tell you what I think, which doesn't make it right or wrong. But the point is, it needs to be a place where people can go, have a conversation, actually understand the challenges in front of them. And I frankly don't think there's as much of that. Now, what's interesting in the world of Zoom, accessibility is actually much easier than it is walking into Andrew's office in Cambridge, because I'm sure he's got a PA and a couple of secretaries and probably some guards standing at the door that would keep people like me out. But the fact of the matter is, you can actually, through LinkedIn or you can make a request to speak to someone, and that accessibility argument, I think, is increasingly more important, particularly around the subject of diversity and engagement.
Yeah.
Maybe just a couple of additional thoughts, Liz. I mean, I think it's a very important topic. From the GP perspective, which is obviously where I sit, there are, I mean, well, first of all, there's just a huge amount of work that needs to be done at all levels, whether it's the entrepreneurs, whether it's the investors, whether it's the LPs. I mean, I think that goes without saying. So, but you got to start somewhere, and you've got to start making. You got to try and get. I think that's at least our approach. Is we're not going to solve this overnight, but we want to make incremental progress. You first of all have to measure where you are before, and you can't track progress, certainly incremental progress, unless you're measuring. So we rolled out a big ESG initiative at my firm last year, and one of the things we are tracking is gender, age, ethnicity of the founders, both that we review investment opportunities in and that we do actually invest in. And also the makeup of the leadership teams and of the boards of the companies after we've invested and how they evolve. And we are reporting on that to our LPs, and increasingly, to their credit, more and more of our LPs are holding our feet to the fire to do that. There is a new Investing in Women code that's been released by the British Business Bank that many top tier GPs are signing up to. We've signed up to that recently, which will be we'll be requesting that data. And I just learned they're also planning to extend that to ethnicity as well. So I think we're going to have more and more data so we can track progress. I do believe, actually, I think Lena made the point that sort of starting at the sort of the ground up is an important thing to do. So, for example, at our Deep Tech Labs Accelerator, where we were starting from scratch, because I do feel, if you staff a team purely with middle-aged white males, you've kind of lost already. It's very difficult to then bring in, a female member to that team, because they sort of take one look at the website and think, well, I don't want to go and work there, right? And so I think you can try. It's much easier to get it right from the beginning. So we were very keen to set the management team of DTL, or the mentors, the advisors, the makeup of the cohorts as diverse as possible, and hope to keep that. And so far, we've been quite successful in that. And we certainly make we're not ashamed to showcase the female founders, the female mentors that are part of those programs, because I think it is important to have those role models. I think that that can go some way. The other thing we're doing is top down, and I am a increasingly annoying thorn in the side of my management teams, that I want to see at least one woman on the board of every company that we're working in, and I'm asking more loudly and more aggressively every year, if there isn't a woman on the board, why not? Because the evidence, both statistically, but also anecdotally, is that just makes a huge difference to the governance of a firm, the operations, the returns, and the outcome. And so I think we're pushing top down and bottom up. There's a long way to go, but I think there is some progress and there are some great initiatives out there.
No, that's really great to hear about some of those initiatives. I think it's really helpful to just share with people practically where people are starting. As you say, we've got to start somewhere. There'll be more work to do, but just to hear the practicalities of some of those is helpful. And I think thorn in people's side is absolutely the way to go. Shameless plug from a TechNation perspective. If there are founders listening to this who do not know where to start, head over to technation.io. We have created an entire diversity and inclusion toolkit designed for founders who want to get started but are not sure where to go. Very practical advice that can be implemented in a fairly straightforward fashion. Now, I'm genuinely sad, but we have actually run out of time. I feel like we could go on all day, but my panel are super busy. And also London Tech Week has got a lot to offer. So I need to keep us to time. No doubt the audience have got lots of other sessions that you'll all want to attend. So I will reluctantly wrap this up. Massive thank you to you, Lena, Alan and Andrew. I think that was a really interesting discussion and I personally really enjoyed it. And thank you all so much for tuning in. And I do hope you enjoy the rest of the week. So bye for now.